Here's a long trade of mine where I traded against the primary direction because it came up on Twitter that there was a restructure for Evergrande. It's been a while since that's been in the news, but that has in the past had a big impact on price. I was very late to this. Here it is here. This is all this Evergrande here, which tied in with transitions. But the point of highlighting this is, and the trade doesn't make any money. I scalped off a bit here and the rest went out where I got in. The point being that when you can use the playbook behaviors to time your entries, it's just a way to significantly insulate yourself against getting hurt. So there's a trade that doesn't work. The bulk of that goes down as a loss because I was out exactly the same price I got in, but it was less than a slap on the wrist. So that's important. And then the next one is pros are patient, amateurs jump in, which relates to this trade I took yesterday where I added. It's about the ad more than anything. The reason why I added so aggressively is because I could see that this was the amateurs jumping in. So it's just understanding where we were in that move. Rarely do you see the markets not require the complex phase before changing direction. Because just think about it. It needs the new fuel. It needs to trap people. It needs to get the first believers to change their view, all that stuff. I've got a hypothesis that people are reacting too much to what the RBA said, and that it's more than likely priced in. So I can see the opportunity for the long trade. But what about all those who also agree with me? What's going to happen to them? Well, we just spoke about it. Amateurs jump in, pros are patient. Right? So you'll get some people who want to front run this idea. In the short term, what does that mean? We might even get a short to then look for the long. So many traders that we compete with, they see all the bars and all the MACDs doing this, all that sort of stuff. The next level is you're seeing the people. It's no different to the movie The Matrix. That's the closest analogy I can think of that describes what it's like for us, that there are these colors and bars and lines on a chart, but that's not what we see. Some of that stuff helps us with the execution to be able to monetize what we see so that we're not just punting. Things that you need mathematically to trade, i.e., you got to lose less than you make. And that's what the process and the charts are for. That's all. They're just to help the execution. But how the money's made is nothing to do with these squiggly, beautiful things. So I'm going to have some fun here. I've just gone short. Now, this isn't the main play. I wouldn't have done it if I wasn't aware that in the current environment, a lot of the pros aren't around and it's gone from A grade to B grade, right? So I can suddenly be a little bit more aggressive with my timing of stuff because the competition's dropped off. So this is, to me, just what I was talking about before. It's also starting to speed up a bit too, isn't it? So now I'm going to shut up and focus and concentrate because it went from B grade to being a bit harder. Right? So I'm flat now. Wasn't looking at bars, was it? And on the chart.